Ubiga is a low-cost airline that operates domestic flights in South Africa. The entity has a 31 December financial year end and is a registered VAT vendor. We also have to work with a 14% VAT rate. Omega Air started its operations in 1 July 2011 when it purchased a single Embraer E190 aircraft. During 2012, the entity expanded its fleet by acquiring additional aircraft. You are provided with the following extract from the trial balance as at 31 December 2013. Now, let's just quickly scroll down to the required part of the question. First, I want the journal entries that Omega Air passed to record the trade-in of the Embraer aircraft on the new Learjet. Journal narrations are not required. Okay, so there was a trade-in transaction and we have to record the journal entries. The second thing that they want is prepare the property, plant and equipment note disclosure for the year ended 31 December 2013. So the IAS 16 disclosure note they want from you. The total column is not required. Now what is important here is the date, 31 December 2013, and the extract of balances that they give you right in the beginning of the question equals 31 December 2013. That means then that this is all year-end balances and not opening balances, which is very, very important. Good. Accounting policy, property, plant and equipment. Land and buildings are not depreciated. Equipment is written off over a period of 6 years on the straight line method. The entity estimates the residual value of equipment at 20% of the original cost. Depreciation on aircraft is calculated on the total number of flight hours completed, so we use the production unit method in order to do that calculation. Now, land and buildings. Land and buildings consist of ERF number T2009 Johannesburg. An additional building was erected on the property during the 2013 financial year, that is the year that we are actually busy with, at a cost of 1,368,000 inclusive of that. Good. So what are we actually looking for? We are actually looking for the VAT exclusive amount because that is what we have to disclose in the IAS 16 note. So that gave us exclusive of that 1.2 million. Land and buildings are pledged as security for long-term loan. Now remember, whenever they're going to ask the IAS 16 note, you must keep in the back of your mind, what do I need to disclose in the note? I need the carry value at the beginning of the year, and I need a split between cost and accumulated depreciation. Under my movements for the year, I need my additions at cost price, disposals at carry value, and depreciation written off. And then I need to close off with my carry value at the end of the year, again, split into cost price and accumulated depreciation. So obviously this would be then under the column of land and buildings, this would be then acquisition for the year, additions at cost price 1.2 million. And then very important, we said that this is our closing balances, 4.4 million rand, and there's no depreciation on land and buildings. So we can complete at this stage already the IAS 16 note for land and buildings. We said, well, our closing balance is 4.4 million rand. We have acquired a new building or erected a new building with a cost of 1.2 million. Working backwards means then that our cost price in the beginning of the year must have been 3.2 million. There's no depreciation, no depreciation. So 3.2 million plus 1.2 million will equal our closing balance of 4.4 million rand. And they're done. I mean, you've now earned within seconds, can make it a minute, a lot of marks just by completing figures that were given to you. You didn't even have to think, you just had to plot it in. Right, equipment. They say no equipment was purchased or sold during the 2013 financial year, so we can do exactly the same with equipment. At the end of the year, we have 1.5 million and 500,000 rand accumulated depreciation. So under the equipment one, 1.5 million 500,000, that gives us a carry value at the end of the year of R1 million. they've told us that the equipment is written off over a period of 6 years on the straight line method. And then later on, they tell us that no equipment was purchased or sold during the year. So we can work out very easily what was the depreciation on the equipment for the year. Our depreciable amount is 1.5 million, the cost price, there you have it, multiplied by 80%. Why? Because depreciation is written off a period of 6 years in the straight line method. The entity estimates the residual value of equipment at 20% of the original cost. So you could have said 1.5 million minus 1.5 million multiplied by 20%. The same story will give you 1.5 million multiplied by 80%, and that over a period of 6 years, and that gives us depreciation of 200,000 rand per annum. Again, we have our closing balance. We said 1.5 million and 500,000, carry value of $1 million. We have now worked out that our depreciation charge is 200,000. If we went the 20% route, 20% of 1.5 million is 300,000. So 1.5 million less 300,000 equals then 1.2 million divided by 6 brings us back to 200,000 rand depreciation charge. There was no movement, so our cost price in the beginning of the year and our cost price at the end of the year is exactly the same amount, 1.5 million, 1.5 million. If our closing accumulated depreciation was 500,000 and we've written off 200,000 during the year, it means that our opening balance accumulated depreciation must have been 300,000. 300 plus 200 equals 500. If our opening accumulated depreciation was 300,000, it means that our carry value of our equipment in the beginning of the year was 1.2 million. So 1.2 million minus 200,000 equals $1 million. So the thing balances. You must always check whether this thing reconciles and balances downwards. Right, now we get to the aircraft. Now, the way that I've done the aircraft is that I've done all the calculations in table format, and that makes it much easier to complete the IAS 16 note. All aircraft have an expected useful life of 10,000 flight hours. Now, if you can remember correctly, we apply the production unit method on aircraft. So the total capacity of each and every aircraft is 10,000 flight hours. The following extract was obtained from the entity's records. Description: the Embraer E190 had only to 30 May 2013 a total number of flight hours completed 3750, and the cost price of that aircraft exclusive of that was 5 million rand. Then they had also a Cessna, and at the end of the financial year it has completed 1,500 flight hours and the total cost 6 million rand. Now, if until the end of the financial year it has completed 1,500 flight hours, I'm interested not only on the accumulated depreciation at the end of the year, I also want the accumulated depreciation at the beginning of the year as well as the depreciation charge for the year. Now, if we look here at the flight records, show the number of flight hours completed in the current financial year. So that means that we can work out how many flight hours was actually they did actually fly in the current financial year. So 1,500, and that is now the Cessna, less 700 hours. That would have given you 800 hours they have flown the current financial year. The same thing on the Embraer. As at 30 May 2013, that is the date here, you will see at 30 May 2013, the entity replaced the Embraer and it actually traded it in for the Learjet, which they have acquired. Okay, so up to 30 May 2013, the Embraer has actually flown 3,750 flight hours, of which the current year was 925. So the difference between the two must be the number of hours up to the beginning of the current financial year. The same thing with the Bombardier. That is that also at 31 December 2013, 2,000 flight hours were done. As at the current year, 1,050 hours were done. So the difference must have been the flight hours done up to the beginning of the current financial year. Obviously, we purchased the Learjet in the current year, so that only done 550 hours in the current year. So with that information, I can calculate my accumulated depreciation as at the beginning of the year, as well as my accumulated depreciation as at the end of the year. On 30 May 2013, they replaced the Embraer E190 by trading it on a new Learjet. The cost of the Learjet was $6,270,000 inclusive of VAT. Now immediately you know that you have to take out the VAT, and if I take out 14% VAT, it means that the cost price of that aircraft was $5.5 million. But Omega Air only paid $1,881,000 as a result of the trade-in of the Embraer. So how much did we receive for the old aircraft then? Well, if we only had to pay in 6,270, that's the cost price of the new Embraer, of the new Learjet, and we only had to pay in 1,881,000. It means that we have received for the old Embraer, which we have traded in, an amount of 4,389,000 rand. Good. So that is the proceeds. VAT inclusive, because that includes VAT, 6,270 includes VAT, 1,881 includes VAT. So that includes VAT for the old, the one that we've traded in. Okay, so let's go to my table and let's complete the table. Let's start then in the table with our cost price as at the beginning of the year. Our cost price of the Embraer E190 at the beginning of the year, 5 million rand. Cessna, 6 million, and then the Bombardier, 6 million. That was our cost price of all our aircraft in the beginning of the year. There it is. And if I add that together, the cost price of all our aircraft in the beginning of the year, 17 million. And we can plot it in our IAS 16 note. Aircraft, cost price in the beginning of the year, 17 million. Good. What was the accumulated depreciation as at the beginning of the year? Now, the first thing that we want to work out is what is our total depreciation charge per flight hour. Now, there's no estimated residual that we have to take into consideration. All that tells us that each and every aircraft has a useful life of 10,000 flight hours. So that means if I take the Embraer 190, the depreciation charge per flight hour would be 5 million divided by 10,000 flight hours, which will give us 500 rand per flight hour. And the same thing with the Cessna, 6 million divided by 10,000, 600 rand per flight hour, and the Bombardier exactly the same, 600 rand per flight hour. So for our accumulated depreciation at the beginning of the year, we're going to multiply 500 rand per hour with the number of flight hours traveled up to the beginning of the current financial year. So up to the beginning of the current financial year for the Embraer, it would have been 3,750 less the flight hours in the current financial period, which was traveled 925. And that would have given us, multiplied by 500, would have given us total accumulated depreciation up to the beginning of the current year, 1,412,500. For the Cessna, we would have taken our flight hour, our depreciation per flight hour, and we said, well, for the Cessna, we have traveled up to the end of the year 1,500 hours, but in the current year, we have traveled 700 hours. So up to the beginning of the current financial year, we must have traveled 800 hours, and there's our rate per hour, 600 rand. That gives us total accumulated depreciation of 480,000. The Bombardier, the same story. We've traveled 2,000 kilometers up to the end of the year. In the current year, we have traveled 1,050,000, So if we want to work out the accumulated depreciation up to the beginning of the year, it's the difference between those two. It's 950 flight hours traveled multiplied by 600 Rand. That is the cost per flight hour, and that gave us accumulated depreciation up to the beginning of the year of 570,000. So if I add those three together now, it gives me my total accumulated depreciation as the beginning of the year, which I can immediately plot into my IAS 16 note 2462500, and then I can determine my carry value as at the beginning of the year. Great. Now, they want you to journalize, show the journal entries to record the trade-in of the Embraer aircraft. So let's do the depreciation calculation for the current year as well, and then we'll come back to the journal entries. Good, we have traveled 925 hours with the Embraer. We have the rate there. We have the rate of 500. So 925 hours multiplied by the rate of 500 gives us total depreciation on the Embraer for the year of 462,500. For the Cessna, we have they have traveled 700 hours. We have the rate per hour. So that means for the current year, 700 hours multiplied by 600 gives us 420,000. For the Bombardier, 105 hours multiplied by the rate of 600, that gives us 630,000. And then now, just for the new one, we've traveled 550 hours with the new Learjet, and here we've already established what is the cost price of the Learjet. It was 5.5 million Rand, so we can also complete our table for the Learjet, 5.5 million, which is our cost price at the end of the year. We've said that those three, 6 million, 6 million, 5.5 million, is our cost price at the end of the year, 17.5 million. We can put it in there. And we can say that the current year's depreciation on the Learjet, it's 5.5 million divided by 10,000 flight hours gives us 550 Rand per flight hour. And we have traveled with the Learjet 550 hours for this year as well. So it's 550 times 550, 302,500. So our total depreciation charge for the year is the sum total of them all, 1,815,000, and we can plot that in our table, 1,815,000. So that is there. Good. And because we have that, we can also work out total accumulated depreciation for the year. Now, accumulated depreciation, remember, only on that aircraft that we still have in our possession at the end of the year. So those three. For the Cessna, total accumulated depreciation is 480,000 plus 420,000 gives us 900,000. For the Bombardier, it's 570,000, that one, plus 630,000, which equals in total 1.2 million. The Learjet is only the current year's depreciation because it's new, 302,500. And if we add this now all up, it gives us total accumulated depreciation at the end of the year of 2,402,500. 2,402,500. Now, if we check that back to our account balances, which they gave us right here, 17.5 million, 2,402,500, and that is indeed what we have, 17.5 million, 2,402,500. So if we check down here, we have that figure, we have that figure, we have that figure, and we have that figure. The only one now is what was the carry value of the asset that we disposed of, and we have to do the journal entries in order to record that transaction. So what are we going to do first? First, we have to record the current year's depreciation, 462,500. So we're going to say debit depreciation, 462,500, credit accumulated depreciation, 462,500. And here I made a serious mistake because I haven't entered the statement indication. So that one is statement of profit and loss. And this one is statement of financial position. So please do that. Make sure that you indicate that in all of them. Then accumulated depreciation is also a statement of financial position. Oops. And then aircraft at cost price is also statement of financial position. Okay. And then asset disposal account, that is also a statement of financial position. 3125 debit. Good. Then we're going to say how much have we received for that asset, and we have actually worked it out. There we said that the proceeds on that Embraer E190 that we've traded in was 4389. So we're going to debit the creditor for trading, which is also a statement of financial position, 4389. We're going to credit our VAT output account, so 4389 divided by 1.14, that will go to our asset realization account, 3850, multiplied by 14%, which is 539,000, will go to our VAT output account. Then we have to clean out our asset disposal account. In order to do so, we need an entry on the debit side. So asset disposal, statement of financial position, we're going to debit, and then profit on the disposal of the asset, which is a statement of profit or loss, is going to be credited with 725,000. Then our asset disposal account will be clean and out of our books. Good. Then all we have to do now is to record the new asset that we have acquired. And there is the particulars. We've already established that the cost price exclusive of that is 5.5 million rand. So we're going to debit our aircraft at cost at 5.5 million, statement of financial position. We are going to 14% of 5.5 million. We're going to claim that VAT input. So we're going to debit VAT input, statement of financial position, 770,000. And then our creditors for trade-in is going to be credited, also statement of financial position, with an invoice price of 6,270,000. There's the invoice price of 6,270,000. What do we owe our creditor for trade-in now? There is a credit of 6,270,000, and here is a debit of 4,389,000. So that means that we owe him the difference between those two, which is 1,881. So we're going to debit the creditors account with 1,881, and we're going to credit bank with 1,881. Now, just for that one missing figure, what was the carry value of our asset that we've disposed of? It would be 5 billion less 141,500 less 462,500. 5 million less 141,500 less 462,500, which will equal 3,125,000. So there, 3,125,000 disposals at carry value. The only thing that you still have to do is to make sure that this thing of you is actually in balance. 17 million less 2,462,500 gives us 14,537,500. Plus 5.5 million, the additions at cost price, less the carry value, less 3,125,000 of the aircraft disposed of, less depreciation of 1,815 must give you the carry value at the end of the year of 15,097,500. What is 15,097,500? It's a 17.5 million less the 24,025,500. So that plus that minus that minus that must equal that amount of 15,097,500. Otherwise, your thing is not in balance and you made a mistake somewhere. Very important, also just mentioned, land and buildings consist of ARF number T209 Johannesburg and is pledged as security for a long-term loan. I apologize for my dogs.